This past week was a volatile one for the broader market. Escalating tensions in the Middle East, particularly the ongoing U.S.-Iran situation and related shipping disruptions, pushed oil prices sharply higher. Brent crude briefly traded above $100 a barrel before pulling back. That surge in energy prices, combined with elevated bond yields, kept inflation concerns alive and weighed on risk assets. At the same time, AI spending jitters returned in force. Alphabet and Tesla's earnings reports highlighted heavy capital expenditures and cash burn tied to AI infrastructure. This triggered a sharp Thursday sell-off across the Magnificent Seven. Those names alone shed nearly $800 billion in market value in a single session. Tech and growth stocks felt the pressure most, while some defensive and energy-related areas held up better. By the end of the week, the major indexes finished lower. The S&P 500 was down roughly 0.6%, the Dow about 0.4%, and the Nasdaq took a harder hit, dropping around 2.1%. Friday brought a modest recovery attempt as oil eased and some buying returned, but the overall tone remained cautious heading into next week's Fed meeting and a heavy slate of mega-cap earnings. Against that backdrop, my main M1 portfolio moved in line with the risk-off, growth-heavy environment. From the Friday, July 17th close through July 24th, the portfolio declined $5,608.42, or 2.28%, finishing at $240,536.68. The drop was driven almost entirely by the concentrated Palantir position, which accounted for the vast majority of the dollar loss. The income-oriented slices and individual holdings outside of the big growth names held up much better, and Nvidia actually finished the week in positive territory. Dividends continued to flow steadily, providing a partial offset to the market decline. Overall, the portfolio behaved as expected in a week defined by geopolitical energy shocks and renewed questions about AI capex returns. High beta growth led the downside, while the income sleeve provided some ballast. Here are the 8 main pie slices ranked from highest gain to biggest loss this week. First, Nvidia at $17,403, up $339, or 1.99%. Second, Apple at $5,206, down just $11, or 0.22%. Third, the ETF and dividend slice at $67,963, down $352, or 0.52%. Fourth, VOO at $3,628, down $21, or 0.59%. Fifth, the dividend and ETF one slice at $73,251, down $468, or 0.63%. Sixth, QQQ at $5,412, down $87, or 1.60%. Seventh, Microsoft at $4,470, down $141, or 3.08%. And eighth, Palantir at $63,200, down $4,863, or 7.15%. Palantir was the clear outlier on the downside and the primary driver of the weekly portfolio decline. Looking at the full portfolio movement from July 17th to July 24th, starting value was $246,403.72. Ending value came in at $240,536.68. That is a total change of down $5,608.42, or 2.28%. Market gain was negative $5,867. Dividends earned during the period added $258.62. Net cash flow was zero. The one-week chart shows a relatively stable start to the week, followed by a sharp drop mid-week, especially on Thursday, and a small bounce into Friday's close. Here are the individual dividends received from Monday, July 20th through Friday, July 24th. QQQY paid $5.89 and another $4.29. IWMI paid $44.92. IYRI paid $17.80. QDTE paid $19.73. QQQI paid $61.66. SPYI paid $34.18. YMAG paid $8.13 and another $15.48. That brings the weekly dividend total to $212.08. Turning to the dividend tracker for 2026, total projected income sits at $15,455. Dividends earned so far are $9,383. Paid income is $9,264. Pending income is $119. Estimated remaining is $6,071. Average monthly income is $1,287.94. On a run rate basis, that works out to roughly $15,455 per year, $1,288 per month, about $297 per week, $42.34 per day, and $1.76 per hour. Still on track for a solid year of income, even after this week's market pullback. Looking ahead to the week of July 27th through the 31st, several high-impact events are lined up that could set the tone for both growth stocks and the broader market. The biggest single event is the Federal Reserve's rate decision on Wednesday, July 29th. Markets currently expect the Fed to hold the federal funds rate steady in the 3.50 to 3.75% range. The real focus will be on the statement and Fed Chair Kevin Warsh's press conference afterward. After the recent spike in oil prices and elevated yields, any hawkish language about inflation or the possibility of a September hike could pressure growth names, including Palantir. A more neutral or data-dependent tone may give the market some breathing room. Earnings will be equally important. On Wednesday after the close, we get Microsoft and Meta Platforms. Both will be closely watched for commentary on artificial intelligence capital spending, Azure and cloud growth, and whether free cash flow is improving after the heavy investment cycle. Then on Thursday after the close, Apple and Amazon report. Investors will be looking for iPhone demand trends from Apple and, more critically for the AI narrative, Amazon's AWS growth and any updated guidance on data center spending. On the economic data front, Monday brings durable goods orders. Tuesday features consumer confidence. Thursday is particularly heavy with the advanced reading of second quarter GDP, personal income and spending, and the PCE inflation numbers, which are the Fed's preferred gauge. Weekly jobless claims also arrived that morning. Geopolitical risk around the Middle East and oil prices remains an ongoing wild card. Any further escalation or de-escalation could quickly move energy prices, yields, and risk appetite. I will be watching how Palantir and the broader growth complex react to the Fed's messaging and the mega-cap reports, while the income sleeve continues collecting dividends regardless of the short-term noise. That wraps up this week's M1 Portfolio Recap. For full transparency, the live portfolio link is in the description. Thanks for watching, and I will see you in the next one.